Okay, I think we're good to go. Good evening. Or afternoon. I think that's most time zones. Hope everyone's doing well. Let me know if you can hear me, see my screen, if you're alive after the recent events that unfolded in this market, and let's have a chat. Sounds perfect. Thank you, Halo. Let's go, says John. Hi, John. I survived. Good. Alive. Good. I should really tweet these streams, and I'm just so lazy on Twitter. It's unbelievable. But anyway, just means I can read the chat more thoroughly. First things first, go get the FTX app, formerly Blockfolio. Shill your family some now technically discounted altcoins before they enter into a bear market. There are also NFTs on there that are in a very, very healthy trend at the moment. That's fully sarcastic. But it is the best crypto mobile app on the market. Go get it. Go track your portfolio. Hide your portfolio. Share your suffering with your family, because sharing the adversity will make it easier to overcome. Suffering together will build some strong bonds, you know? So thanks to the guys at FTX for helping us out and being our partners. And yeah, like the video, subscribe. I know you all have anyway, but worth mentioning anyway. Hi, Cred. By the way, come on, man, don't stream at the same time as SZ. Not cool. So this channel's been around for about a year and a half, and we have always streamed at 7 p.m. UTC. That's never changed. It only changed for some time because UK time was different. British summertime was different from UTC, but we've never changed our content time over however long this channel has been alive. But it's also YouTube. If you want to watch SZ, if you want to watch this, just catch one of them live and watch the replay of the other one. You don't have to pick and choose. First things first. So there was a Twitter space that I did as the market didn't look so great, or before it unwound. And there was also the chat we had on Monday and the casual Friday with the duck before that. Did anyone lose less money than they would have otherwise as a result of either the videos or the space or something else? Or did you just get rolled? Only lost 100% instead of going into debt. Okay. Got wrecked. Nice. I was already down. Can't lose much if you already lost most of it. Jesus Christ. Lost less money. Okay, cool. Again, like when these big moves happen, most people are hurting, and others will use it as an advantage to, you know, make themselves look good for Twitter, like, oh, I called this, etc. But it's usually not a good time to do that. But then again, there is no good time to do that, because if you wait too long after the event, then it just seems like weird sort of clout chasing. So I kind of just avoid it in general. But hopefully with, you know, the mix of, you know, the newsletter talking about market cycles and Bitcoin not looking great, and the space and the casual Friday and the Monday stream, etc. I hope, you know, at least it's not really the consequences that are as important as long as the reasoning is clear. That's more valuable, because the reasoning is what will protect you and make you better from rotation to rotation and market cycle to market cycle. Not just, oh, I watched a YouTube video, the guy said it might go to mid-40s, so I didn't lose all my money. That's far less helpful than understanding the reasoning and the confluence at mid-40s and leverage OI stuff, whatever. You both saved me a lot of money. Okay. Cool. So yeah, let's look at some stuff. In terms of technicals, the same monthly range is doing like a pretty good job, right? If you recall, highest close, lowest close, and then the mid-range at 47. And we made the argument to expect, if it's a big liquidation, OI, flush, leverage-driven move, yada yada, for price to be discounted anywhere from 5 to 15% through high time frame support as a result of those liquidations, before snapping back up, right? And you can even see if you just measure strictly from the midpoint, that's an 11% wick. So at some point, let's say you've got this 47k as support, which is quite reasonable as the monthly mid-range and all the moving average confluence there. At some point, this candle looked like this, right? By definition. And that's a really scary looking candle. But if you've got the type of context that we discussed, whereby you know this is a kind of high time frame value area, and you expect, by virtue of liquidations, that it's not going to hold perfectly and there's a high chance that the market pushes through it, this shouldn't be as scary with those contextual factors in mind, especially with some experience, right? Like these liquidation-driven moves will always be outsized and carry significant tails in either direction, right? So it's more of a question of, I generally expect this mid-40s to offer a bounce, and then it's how greedy am I going to be in buying it. So most of the time, on a liquidation-driven move, outrightly buying the level is not the best idea. Maybe it is on a reclaim, right? So you get the liquidation-driven move, and then it comes back, and then it tests the level more thoroughly. That can be reasonable. But if you're going to be knife-catching, mass liquidations, OI flush, etc., if you have a high time frame level, always give yourself at least some mental space of like 5-15% to allow for these outsized wicks. Okay, and that's why I generally, when I trade this type of stuff, the big lick events, I'll normally only use spot. I do not want to use perps or futures, whatever, if in my mind I want to be able to stomach like a 10-15% immediate drawdown from my entry. I just find my trade management is better with spot, so I use spot for that type of stuff. Is that clear so far in terms of high time frames and having an expectation, or at least being comfortable with wicks when you have big liquidation-driven moves? I'll take that as a yes. So those are the big high time frame levels. If we include our moving average memes, I don't know where they've gone. Hold on. Marked levels, are you here? Yeah, so if we add our moving average memes, we've got the 50 weekly that was hit, the 200 daily that was hit as well, certainly at the extreme, etc. So this is the type of area where kind of value buyers and higher time frame or slower moving trend following guys will be looking for mean reversion. Right, so we know it's a monthly level, week, high time frame technical levels, but also just these slow moving averages. You're going to get some bid coming in as a result of those trading systems as well. So now the question is, like, what happens next? Like, the leverage got flushed. A lot of the moving averagey stuff was retested. Does that mean we just go up in a straight line now? And generally, the answer to that is no. After you get this type of big flattening and liquidation event, generally, at least my framework, is that the least likely outcome is a direct V reversal, and the more likely is just mid-time frame chop, volatility falling off, and some sort of new range formed as the market resettles and recovers after a liquidation event. We can kind of look at some stuff to add force to that argument before I add some technical levels. So finally, now look, this is somewhat refreshing because for a while I had to deal with a ton of de facto gaslighting on Twitter that, oh, open interest doesn't have to flush and yada yada, like all sorts of nonsense that I'm not going to get angry about. So it is refreshing to see that like crypto markets still sort of do what crypto markets do. And this was like the real unwind, right? From the peak of 46 billion open interest all the way down to 32. Now that's more like it, right? If we look at some aggregated data, again, this is all from our friends at Coinalyze, you can finally see this is what a OI flush type of candle looks like. And, if you compare it to just the preceding months, you can see why Don and I weren't convinced that we'd seen some sort of flush, reset, etc. I mean, even looking at liquidations, you can see it's like a pretty big day relative to the last few months. And of course, even for a short period as the market got backwardated, flattened, whatever, we had sustained negative funding as well. Now, the reason I bring this up is that you can see that in general, when you get these big liquidation flushes, they don't always necessitate reversal. And sometimes that's not even the bottom, right? So if we just eyeball a few of them, like this one here, right? If we look at this big flush, that's actually on this candle. And you can see that was after the top, and the market actually traded a bit lower, then made a lower high, and then you had trend continuation, right? So in this instance, the liquidation event wasn't a precursor for immediate reversal. Now, again, you have to look at market structure, yada, yada, and all of that type of stuff. But we're simply assessing the claim that the big washout means you reverse immediately. Is that true or is that false? Now, let's look at another one, which was this move here, which corresponds with this move in price action. Now, did that immediately lead to a reversal despite being like a huge OI flush, etc.? I mean, it didn't, right? The market pretty much went sideways before then starting to reverse. And you can see it even traded through the low, and this is just like a really painful 30k range that we traded in. So again, the big OI flush wasn't indicative of an immediate reversal. Fucking hell. Let's do the same here. And again, I'm just picking the outsized outlier moves, right? This move on this day, did it lead to an immediate reversal? I mean, again, the market went sideways, popped up a little, but ultimately made a lower low before moving higher. So again, generally the pattern that we see is when you get a big liquidation event, the market, the price action you get is a bit shit, and often you will actually get a move, an attempted breakdown below the liquidation low, which then is your precursor for either trend continuation to the downside, right? Or, if the regime is different, for reversal. In any case, I think it's fairly compelling to argue that expecting an immediate reversal from these liquidation events probably isn't the highest probability bet to make. Does that make sense to anyone? Because I know, like, the argument we all want to make, like, the one that has narrative appeal is that, okay, now everyone's been liquidated, we can go back up. But in general, that doesn't tend to be true immediately, right? We usually have to pay for all those liquidations with some pretty agonizing price action, shitty sideways at best, before the market decides how the trend is going to either continue, reverse, or whatever. So expecting like, oh my god, there was like a big wick and that's it, it's over, we go straight up now and I missed the bottom, probably not the best way of thinking. That's my view, at least. You can also see, just in general, if you're going to make an argument for a sort of reaccumulation of sorts, like where a lot of money swapped hands at 30k, although I don't really think this is the best example because of the idiosyncratic nature of the market where there was really urgent de-risking from China. But in general, if you're going to make an argument for, some sort of reaccumulation range before the market breaks out, you generally want to see a slightly more prolonged period of negative funding that gets absorbed. So funding aggressively lower and price moving sideways, that's a pretty good divergence, and that's when you get your type of squeeze formula. So if we're going to reverse and offer a meaningful bounce from the mid-40s, what I would honestly like to see is some sort of range formed in the area we're in. Ideally, derivatives getting short and some sort of funding regime reminiscent to this, which gets absorbed. So funding aggressively down and price moving sideways or even slightly up. And then that will be a good precursor for a pop higher. And even then, that wouldn't be like, okay, now we go to all-time highs. We certainly have levels to deal with that we broke through. But in terms of addressing current market structure, I think we've made a semi-compelling case that expecting immediate reversal after these big open interest flushes isn't the most likely outcome, right? So what would be better than that? Well, it would be some sort of consolidation where we see derivatives getting aggressive. They don't get rewarded as price moves sideways, and then some sort of pop, and then we can decide from there. So what kind of tentative conclusions am I entertaining? 1, immediate reversal isn't the most likely outcome, as we've seen in previous examples. 2, if we're going to reverse from the low to mid-40s, the better way of doing so would be a range with aggressive shorts or aggressive positioning that pushes funding negative, and the market absorbing that just by moving sideways. And then the third thing, kind of more tentative, it wouldn't be surprising to see price trade to or below the liquidation low that we made, and then reclaiming that would be some sort of superior setup. Like we saw in a lot of these instances, the market quite often traded lower than the big open interest flush candle. So for example, I wouldn't set like some sort of swing trade stop below this low because quite often they get poked and spiked, even if most of the open interest is gone by then. Does that make sense to anyone? WC says not really. What doesn't make sense? I can try to clarify. Got lucky on the date cred? Absolutely not. No, sir. Okay, seems to make sense to everyone else. WC, if you have like a specific question, I can try to answer it, but otherwise I'm going to move on. I'm just kind of slow. Okay. I'll try to write it out. 1. Expecting immediate reversal following liquidation event isn't super convincing. Price tends to range or even move lower in the short mid-term. Okay. A good outcome would be a range / sideways accompanied by negative funding that gets absorbed. Funding down neg while market stays sideways, doesn't die. What else did I say? It's not uncommon for price to spike the low of the OI wiping candle, but its reclaim is often a decent setup. General expectation: range chop, not great PA. If it pops, mean reversion back down, back into range is likely. Does that make sense? Oh, WC says, yes, that helps. Thanks. Awesome. So, you mean, screenshot this if you want. I'm going to nuke it in a second. But that's sort of my framework for this. I just don't see a ton of evidence to suggest that after some big liquidation event, the market just straight V reverses. Often it takes some time to recover, some sort of range, poke around, sometimes even poke lower. And volatility generally kind of drifts off before either a short squeeze is set up or the market moves lower, right? So that's just kind of what I'm conceptualizing. Another thing, you can see that specifically coin margin contracts got completely obliterated, right? Pretty much retraced their entire build-up from the 40k bottom. That's generally good insofar as, yeah, the market's crushed, chop, might move lower, etc. But these coin margin longs are the most vulnerable to downside moves. So if you want to hedge BTC, coin margin contracts or inverse futures are really good because convexity works in your favor. But if you want to be long BTC and you're margin is posted in BTC, as the value of BTC goes down, so does the value of your collateral for that position. So you get doubly fucked, basically. So that non-linearity to the value of your collateral / margin, which is the Bitcoin price, it works in your favor if you're short, but works against you if you're long. And that's why it's kind of the degen gambler's contract. Because in essence, you are longing your longs with your longs as collateral or some nonsense like that. So this was kind of overdue, in my opinion. And it's really not the worst thing in the world. But again, you can kind of see, similar to just the aggregated open interest, when coin margin guys get absolutely crushed, more often than not, we get chop and maybe lower / sideways rather than an immediate reversal. Is everyone kind of with me so far in terms of reasonable expectations post-liquidation events? Okay, like the video if this is cool, interesting, helpful. Nuda, says Abu G. Okay, cool. Great. Now, another thing which is, I was happy to see because we spoke about it to such lengths, quarterlies got backwardated, especially, Deribit got crushed especially. But you can see this is something the Duck and I talked about, that's to see some sort of bottom in the market or entry signal or, a stop to the selling or signs that we're at the extreme of a move would be backwardated quarterlies, and we got that. Hurrah. And basis has come back to, that's actually quite a strong bounce, pretty meaty, all the way back up to kind of 8-9%. But this is just something to bear in mind for the future, especially if the market's coming off of steep premia and it goes from that to a liquidation driven move into backwardation. Very often that'll be the bottom. Of that specific move, not for the market itself necessarily. So that's cool. That was nice to see. Do you think there's more OI to flush left? I think most of it's gone. But that doesn't mean price can't move lower, right? Because that's literally what we had. Okay, because that's literally what we had in after the first top, right? Whereby what? Okay. Let's take the first time we got our 60k thing. Open interest got obliterated, like on this candle here. You can see that the market then just made a lower high and died. So the fact that all the other OI flushes were like this move down relative to the top leg. If you look at this candle, you might think, oh, well, that's all the open interest gone. We can go up now. But often you just get chop and then it, especially if new positions get established in the chop, those can kind of get, the new trades can get flushed as well, right? So what I'm saying is seeing the outsized shift in open interest doesn't guarantee that the market has bottomed. If anything, from our case study, we've seen that at best you get chop, at worst you get trend continuation. Probably not huge wickiness then. Yeah, most likely. I'm going to delete this, but this is kind of the quick summary of what I'm looking at before we go into technical levels and stuff. 3, 2, 1. Okay. Permanent empty. Let's add our monthlies again. Boom, boom, boom. So in terms of where the market is right now, let's consider these two factors, right? One is that for the reasons stated in that 4-point plan, I'm generally expecting volatility to be kind of crushed and the market to be in a bit of a mean reverting regime. So I don't think there's a swing trade or something big coming up in the short term, for me at least. Also, the second point would be that by definition, if this is the range high and this is the range low, the market is currently at mid-range, which is generally speaking the least compelling area to build positions, right? Or to establish conviction. Now, yes, if you get like a very clear kind of reclaim setup above the midpoint or a very clear breakdown setup below the midpoint, you can target the extremes of the range. But in terms of fresh positioning, from a kind of risk-reward point of view, the mid-range tends to be the trickiest area to make important decisions. So when you have expecting shitty price action, chop, or even another poke towards the lows as a result of what usually happens from an OI flush, and B, the market being at high time frame mid-range, those two things put together don't scream, hey, start trading in established positions right now, outside of really short-term stuff. Okay? In terms of where I think the market will range, as to the downside, it's fairly common when you see these outlier wicks for price to retrace around 60 to 70% of the wick before finding support in a similar area. As we saw even on some of the previous flushes, it's not too uncommon for the market to poke below the OI flushing candle before, resuming the range. So in terms of downside quote-unquote targets, honestly, just the lower portion of this wick, anywhere from 70 to 100% of it, that's a kind of reasonable type of range low area. And in terms of the cap above us and to the upside, I kind of think we're there already. For me, that's made up of two levels. One is just the 50k handle more broadly, kind of the psychological round number. And the technical level that aligns with that is this former range high breakout type of structure turned resistance. Now, again, obviously it can poke a bit above and poke a bit below. But in terms of range, macro, we're still at mid-range. Within that, I think 50k-ish resistance and mid 40k, sort of around the wick itself, is the range low / support. I would be quite surprised if the market just popped immediately into 50k plus, but even that wouldn't be a super attractive long, because you end up trading back into high time frame structure. And if anything, with what we know about how price tends to behave after these OI flushes liquidation events, if without any type of reaccumulation or strong basing, whatever, we just get like a derivatives-led strong pop into prior support at 54, I'd probably look to de-risk / sell that for a mean reverting move back into the 50s. But my expectation is some sort of unpleasant price action / range between 50-ish, and again, wicks higher and intraday price action above, whatever is fine. 50-ish range high. And then, again, most of the bottom portion of this wick, let's just take some liberties and do something like that. Low to mid 40s, range low. That is my expectation. And if it does want to just immediately pop up into resistance, I'd probably look for a rotation lower, at least for a short-term trade. But again, bear in mind the macro. OI flush equals shitty price action, and macro mid-range equals not a great place to build high conviction positions. So if you're itching for a move having missed this, I would be very careful, because we're not usually rewarded with the best rotations after a liquidation event. I would keep it very short-term and very nimble at most. Does that make sense so far? I know it's boring, but that's kind of what we get when these things happen to the market. And yeah, Halo, to answer your question, I definitely think that this wick and this move was exacerbated by virtue of it happening in the middle of the night when markets are, it was Friday night or something, or Saturday morning, when markets are thinner and there's just less liquidity in general. That probably means the wick is longer than it would have otherwise been, but I don't think it changes all too much. I don't really think about the CME gap, I'm sorry. People memeing on-chain. I don't care about the CME gap. Maybe I should, but... Yeah, so that's BTC. Nothing sexy, but that's what the evidence suggests. We don't get sexy after a big nuke. So scalps only, be patient otherwise? I think so, Thomas, yeah. Yeah. Let's take a look at ETH. Unsurprisingly, ETH held up, well, unsurprisingly for the recent regime, ETH held up better than BTC. 4K is still holding. In a similar vein, I expect range-bound conditions, more or less, in Ethereum. And I'd be really surprised and would have to reconsider a few things if it just started to run away properly. Now, obviously, because it moves more in either direction, get bigger downside moves, bigger upside moves, etc. on average, you have to kind of extrapolate that to your range a little bit. I haven't really thought a ton about this. But if more or less the line in the sand for bulls is 4K, any acceptance below that would suck. This is one of those where the wick refill type of setup wouldn't be something I'd be interested in buying because of how important this level is. If anything, you know, support. This should be the area, the deviation, if you will, and then it's been kind of reclaimed here. Trading back below it would probably be not so great, right? And as for the range high, I mean, this chart is honestly quite ugly. The way it went sideways, you can see all of this. If I had a gun to my head to point out a range high, I'd simply use this early cluster here for it, around 43, 44. So for ETH, 4K support, 43, 44 resistance, consolidation, lower volatility, then it's past price action, obviously, not lower the volatility than Bitcoin, until proven otherwise. Okay? Yeah, that's my ETH take. 4K, 4.4K, same general mindset that don't expect trending moves. I expect the market to be kind of mean reverting and range bound. So, you know, buy support, sell resistance, short-term mindset if you're going to punt, in my opinion. Now, the elephant in the room is that you would be potentially well served to ignore everything I've just said about short-term price action. Why? Well, because it's quite clear that equities are in the driver's seat when it comes to crypto markets, global markets, whatever. So if the S&P and just traditional markets, US equities more specifically, continue to show weakness, it's quite clear that at least in the short term, we're not going to be able to shake that off or decorrelate or what have you. But at the same time, the probability that we have some sort of edge in trading the S&P and then using that for crypto positions is quite low because that's not our market by definition, right? So I'd keep an eye on this, but be aware that whatever short-term strategies or setups you might have in BTC and ETH, if we start getting continued volatility in equities, we'll probably just, especially to the downside, that's when the correlations really get tight. That's not something we'll be able to shake off. So something to bear in mind there. And I'm not going to give you my TA on the S&P because it's not a market that I trade. I mean, if I had to eyeball it, this doesn't look too terrible, but what do I know? What do you look for in BTC when you want to enter alt position? If I'm knife catching, the bottom. If I'm just looking for altcoin short to mid-term trades, as long as Bitcoin doesn't look like a piece of shit that wants to go to zero, altcoins are fine. So generally, long alts equals short BTC vol. Generally, good time to think about alts when BTC is at high time frame support, catching a nuke, catching a knife, not a nuke. Premise, BTC bottoms, alts bounce harder. That's the implicit reasoning. Okay. 2, when BTC is sideways / choppy. Premise, range equals low vol, which equals good for alts. That's kind of altcoins in a nutshell. That's been less true recently, bear in mind. But I still think overall it's a decent proxy or framework. You used to say buying FTT as proxy for when BTC goes up in a trending environment, yes. But that's underperformed like a ton of stuff recently, and that hasn't been a play that I've been making. I don't have a replacement for that now. I mean, just Bitcoin and ETH mostly, to be honest. FTT is frustrating? Yeah. Sol is the real FTT? Yeah, I mean, when it comes to SAM coins and the SAM ecosystem, if you've made the wrong bet, like Serum instead of Solana or something like that, man, that's one of the most painful trades, you know? We can look at a couple of the altcoins and where they ended up. AVAX. It unfortunately missed the level that I was interested in for a knife catch, which is this weekly consolidation, pre-breakout cluster, whatever. So it didn't really hit anything for me. On the daily time frame, if we're gonna call a spade, that this is a break in market structure, right? By definition, you basically had up only here. I mean, you can just kind of eyeball the trend at that point, right? That's a breakdown. This, so you have to assume the trend is broken until proven otherwise. And if it rallies, where's the most sensible area for a lower high or something? Well, it's this daily cluster at around 100. So you had the market break trend, you know, reaches some sort of level, bounces, but the overall trend is broken. And also bear in mind, at least for me, this isn't some high time frame bottom/support area, at least on the weekly chart or anything like that. So I'd be slightly careful with plowing back into AVAX as you may have done here, because the high time frame conditions have shifted in that A, daily trend is broken, and B, hasn't really reached any weekly/high time frame support yet. So I think employing the same mindset of being short term with it, you know, level to level, support to resistance, etc., is more reasonable than expecting continuation of these conditions now that there's some evidence that they've been shifted. Thanks, Martin. I love you too. Would you de-risk alts at first resistance areas? If I held any, yes. But that's just me. I'm conservative boomer. Sol. I mean, Luna's just mad, isn't it? Just made a new all-time high right after the dump. It's an amazing recovery. My sort of midterm line in the sand for Solana is this highest close at 194, is it? You could even just box out the top candle if you want to take some liberties with wicks or whatever. I think below that, things start to look really rough, because at that point, this, you know, if you break down from this range high resistance turns support, if you break down from that, then suddenly this entire range looks like some sort of distribution-y deviation, etc. It would also obviously be a break in market structure, and I think then you have to target, I mean, God knows, like at least this low here, right? If not the trailed lows through September, October. So I think it's okay as long as 194 holds, or if you get like an effort to break it, which gets reclaimed, that's probably like a decent long, as long as it's risk defined. But just bear in mind that at least on medium time frames, if we get a breakdown through like below 190, until it's reclaimed or unless it's reclaimed, that chart starts to look rather unpleasant. It depends on your time frame preference. Like I think overall on the weekly, if you're above this cluster, the trend is intact. But sometimes you just get these daily red flags before the weekly picture really kicks in. So I'd bear that in mind. Can you tell us in 1 or 2 minutes why you use log chart? It doesn't really matter. All of my stuff is horizontal anyway, so it doesn't have a difference, given my anchors are on the candlesticks themselves. Any logic in switching weak alt positions to strong alts and pray for the Dalai Lama? Sounds a bit like you're chasing, man. Aren't you contradicting yourself by saying you would de-risk alts, but assuming ranging environment for BTC, which you believe good for alts? So the ranging environment BTC looking good for alts is when BTC doesn't look like a piece of shit after a big breakdown. Given BTC kind of looks rough after a big breakdown, or at least I'm expecting not so great price action with a decent chance of spiking below the crash low, I think that's consistent with the argument that I would de-risk alts at high time frame resistances if I were holding any. Let me know if that makes sense. Like, basically, the answer to your question is no, because there's a difference between bullish consolidation in BTC and post-nuke consolidation in BTC. That's my answer, I think. If you think more downside for BTC, would it be better to look for shorts on BTC or alts? Probably weak alts, but my answer to this question is, if you think downside for BTC, I'd rather expend mindshare on planning which alts you're going to buy for those quick, not even quick bounces, just at value areas or for the next trade. You know, downside is always limited, whereas if you catch even some decent bounces on the strong stuff, it's just much easier to... It pays to be a bull when you're dealing with forced sellers. Horizontal levels using wicks or closes, pros and cons of each. My experience has just been using closes is better, especially if the wicks are outliers, but that's just me. Do you set alarms so you're up during big licks? I mean, look, my body is clearly just plugged into the Matrix at this point, because I woke up on my own with no alarm or anything at like 4:40 or 5 a.m. with a really dry mouth, took a sip of water, and that's the first time it's ever happened. I normally like don't wake up in the middle of the night and everything. And I checked my phone and saw that shit was about to get spicy. So clearly some internal Matrix body clock woke me up as the market was about to do market things. Nightmare about the date? Yeah, no comment. If the alt USD pair has broken market structure, but the alt BTC pair is maintaining market structure, how do you trade it? Depends which pair you're trading. If the alt USD pair is the pair you're trading, which is likely, and it's broken market structure or shifted trend, whatever, then I'd be careful, you know? In your opinion, is there a use case for MA or EMA for your style of charting? Yeah, there is. I spoke about it in the last stream on Monday, so go listen to that. The basic summary version is, I like to keep track of where a lot of the moving averages sit, so that if the market moves 20, 30, 40, 50% away from them, I can do a quick eye test or mental calculation for, am I comfortable eating a drawdown of this size between where the market is now and where the slower moving averages are in the not too distant future. Now, sometimes it doesn't matter, and you get a big gap, and then the market moves sideways and the moving averages catch up. But in general, just like we did before this dump, we kind of looked at where a lot of those slower moving averages ended up and assessed whether the risk reward of staying long was still good if that's the potential drawdown we're going to stomach. So I'm not going to chart XRP, I'm sorry. Yeah, so I think that honestly that's most of what I've got. I'm going to bring up the moving averages, which I kind of eyeball. Don't take them seriously. It's not like my trading technique. But I've got the 21 week, the 50 weekly, the 50 daily, and the 200 daily. Those are the ones which have made my list for no special or particular reason whatsoever. Have you sold your liquidation buys? Yeah. That the lifespan of that trade is very, very short. So yes. Yeah, I wish I had more interesting things to say, but to be honest, as we assessed by looking at the type of price action we can expect, reasonably expect, after an OI flush candle, it's either sideways or down, then sideways, or just down, right? It's not terribly attractive, kind of, okay, quickly buy, go all in this inside day failure and expect it to go to 60k or whatever. We pay for our sins for all those liquidations with some unpleasant price action on average. So that's kind of where my mental is at. I think really short term, low time frame, in and out, if you're going to trade it at all. If you're going to trade it at all, with the knowledge that we're still probably going to get ragdolled by whatever the S&P does for a bit, especially if it's to the downside. So that's another variable to consider. I didn't say up, down, or sideways. I mean, if that's what you derived from this stream, then I don't know, man. I disagree. I think there's been a bit more value provided than that. I didn't look at CVD, but I think it's a good thing to look at if you can reasonably interpret it. I think March 2020 was like a once-in-a-lifetime black swan, and using it to analogize is probably not the soundest reasoning. Matic, yeah, I mean, if the market looks uninteresting, there are definitely going to be narrative plays, rotations, etc. Basically, whatever Hasaka tweets is probably going to do quite well. But I'm just not that type of trader. I'm not very good at that type of stuff. Most of my edge, honestly, comes from trading Bitcoin, ETH, and then punting altcoins when I think Bitcoin and ETH are at support, especially in liquidation-driven moves. That's the stuff I'm good at. So asking me in these conditions where I think the narratives are and altcoin rotations, guys, I'm not that guy. I'm sorry. Any final questions before we wrap up? You are not that guy, pal. Yeah, I know. What do you think of BTC Dominance? Probably goes up in a bear market and generally goes down in a bull market with the macro trend, macro mega, like sort of 2, 5, 10-year periods being down. But it also depends what you mean by BTC Dominance, because it's just a weird one. There's like 21 million BTC, but an infinite supply of everything else that's ever increasing. So it's probably not, I don't know, I don't really pay a lot of attention to it. Focused MBA asks if I blindly pick indicators. No, I just have friends who are traders and are much better at these trend following tools. So I ask them, hey, what are some of the good important moving averages to look at? And they give me an answer. And because that's their domain, I add it to my chart. Again, it's not an instrumental part of my trading system. I will use it to kind of infer what the trend following guys are thinking, and B, find out where some relative value areas are for those slower moving guys, and C, so I can measure where the market is relative to a cluster of moving averages and see if that drawdown is something I'm comfortable stomaching. It's not like I buy this moving averages and sell the other one, etc. It's not how I trade. But no, believe it or not, I don't blindly pick indicators. Is funding important with such low open interest? I think so, yes. Are you from Russia or other former Soviet country? Yes. What I will say is, if we get more sort of hawkish inflation data, so inflation higher than perceived, etc., that's bad for risk assets because it brings forward the likelihood and the timeline for interest rates increasing, which is generally bearish for risk. So if we get some ugly inflation prints from the US, or it's persistent and the whole non-transitory narrative sticks around and tapering is moved forward, yada yada, that's bad. That's bad. I don't think, like, look, I think monthly and weekly wicks, etc. are good if you're looking for sort of precursor setups, so you have a spike or something else. But in terms of finding levels and finding structure, I will use candle opens and closes. So the question as to how important is funding right now, my answer is twofold. So in the very short term, it's not that important, because when you get a big move down, you get a ton of liquidations, and those liquidations happen in leverage products like perpetual swaps, etc. Like, you don't have leverage in spot unless it's spot margin, right? But you do have leverage in perps. Now, again, funding is a product of the perps premium or discount relative to the index. So if you get a ton of liquidations in the perps, naturally that's going to exacerbate the move and push price much lower than it would have been otherwise. So the perp gets hammered, a ton of liquidations, this is the perp price. And then, you know, spot gets hammered as well, obviously, but it doesn't have all the leverage and all the liquidations. So it stays here just because the market got battered and the perp is trading below the spot price. You'll get negative funding. And the way people will interpret that is say, oh my god, look, funding is negative after such a big move. That means everyone is short now. No, it fucking doesn't. It doesn't mean that at all, right? The reason you have negative funding after a nuke is because the leverage that exists in the perp pushes price lower than it would have otherwise been, right? It exacerbates the downside move. The downside move means that the perp is going to be trading below the spot for some period of time as that ARB gets traded or just comes into the market, right? And that's why you will always have negative funding after a big liquidation-driven move. It doesn't mean everyone is shorting, it just means the leverage got absolutely pummeled in the perp. So to answer the question, in the very short term, funding after a big nuke doesn't matter because it's almost always going to be negative and almost always as a product of the displacement created by leverage, which you get in perp and don't get as much, if at all, in spot. Again, spot margin, yada yada. Okay? I still think it starts to matter as the market gets arbed and spreads normalize and funding normalize, etc. Then you can start to see if there's a recovery. Where is it coming from? What does the basis look like, etc., etc. Does that answer make sense at all to anyone? CoinLies funding average data isn't considering the volume of the exchanges, right? So low volume exchange. I haven't really looked into how they aggregate, but you could always just like look at specific exchanges like a Binance or something to get a picture. Overall, it doesn't really change all too much. Based answer? Based on what? Let's get to 300 likes. That'd be cool. We've covered a lot of decent content, I feel like. Cred, do you agree your date was plus EV because it made you wake up at 4 with dry mouth, probably after boozing some? No, you see, that was... The date was that day, so it came after the wake up, so... No, I disagree. Also, the date wasn't plus EV. But my personal life is irrelevant to all of this. What would be the most optimal move with my alt portfolio after this OI flush candle? Tricky. Should I sell now and wait for up-down continuation, or just hold and hope for the best? I mean, the second one isn't a plan at all, right? Just hold and hope for the best. So anything that isn't that is probably better. Look, my mandate isn't to tell you what to buy and sell, especially after the outsized move has already taken place, right? I'm just sharing my thoughts and framework and expectations for price action to come. The rest you kind of have to do yourself, guys. Getting a date was the top signal? Absolutely. Do you think these deep wicks usually get filled? I mean, yeah, I do. Like, even if it's not entirely, on average, it's common for the market to trade around them, right? So if we just look at the OI examples that we discussed previously, this was the big OI wick, which closed away all the way down here, up there, sorry. And you can see, oh, fuck's sake, excuse me. Here we go. So this was the big OI wiping candle low, and then the market traded through it before bounce and continuing lower, right? This was it as well. You had OI wiping candle low. Look at where it closed, right? And then you got some of the most agonizing price action ever, and you know it traded around that area a couple more times. Another example. This was the OI flushing candle low. Closed all the way up here. You got a bit of sideways, but ultimately it came back to trade near that low and then even through it before reversing, right? So if we take this example, again, this is because this happened in the middle of the night and liquidity was worse than it would have been otherwise, you get a bit more of an extreme wick. So maybe you could make a reasonable argument that it doesn't get spiked because it shouldn't have gone this low in the first place. I think that's an okay argument, but in every other instance that we've observed for these big type of OI flushes, right, the markets at least come close, if not traded through the wick, which is why I'm saying refilling some portion of it, even if it doesn't spike, seems fairly probable to me, right? And as for where the market is right now, I could entertain a scenario where it just pops straight back up into this resistance. I would be really surprised if that doesn't hold. And I would be honestly even quite surprised by a move like that. I think what's more likely is 50k-ish caps the upside for some time. And then the lower portion of this wick caps the downside for some time. And we get what we normally get, which is some sort of range sideways all for price action for a bit. Okay, I wouldn't treat this as a trending market. And just for my eye test, if this pops up immediately into resistance, I'd be looking for it to mean revert. Okay. Does that make sense? Cool. Yeah, this was fun. Sometimes it just helps to look at stuff beyond the candlesticks, right? But yeah, let's get this to 300 likes or whatever if you learn anything. That would be a good indicator for me as to the type of content that should, you know, exist on this channel. Thanks for spending your Monday evenings here. I know there's some other really good crypto streams going on, SZ and others, etc. So if you are here, you know, go watch the replay of other content creators you enjoy, but I do appreciate your company. That's all I've got. Remember, the newsletter comes out tomorrow, trletter.com. It's free once a week. There's no weird upselly stuff. Just go read it. I literally wrote about market cycle top stuff before everything nuked, so we're going to probably give ourselves a pat on the back. But overall, it's a pretty functional piece of kit. That's all from me. I hope you had a good weekend. Probably not, but, you know, still going to say that. A good start to this week. Newsletter and other stuff coming up, and I'll chat to you guys soon. And girls. And others. Take care.